And here we are with our carrier update, sponsored by PowerFleet. What's happening in freight markets today, Zach?
So I've got our outbound tender rejection index down here in the blue with our outbound tender volume index here in the green, just to illustrate something that we've been talking about a little bit, that demand is remaining high as tender rejection rates are falling. And even yesterday, we had, you see this little blip right here, Ken?
Yeah.
There's a little jump up right here, and we had a little tick down in the tender rejection index. So volume, demand went up, tender rejection rates went down.
So what do you make of this, Zach? I mean, is this a kind of a seasonal pattern? But, demand is still high. Load volume is still high. So you can't really say it's seasonality. Are we seeing new capacity come in? Are we seeing the market adjust? Are we seeing contract prices reset? What are we seeing?
Well, we're just not seeing a lot of change in the dynamic of the freight market. Like, you're not seeing like surges coming from Los Angeles and surges coming from Savannah like we saw, or Houston or some market that, carriers weren't necessarily in position for. But also, obviously, rates are coming up, contract rates are increasing. So it makes things a little bit easier, especially if you have freight coming out of an area where carriers are already bound for. We've seen it with Los Angeles where carriers have priced themselves back into Los Angeles very effectively. You look at spot market rates going into LA, they're $1.20 a mile. You look at anything coming out, it's $3 a mile.
And then I have seen data where, like smaller ports like Mobile, New Orleans, they're spiking up in TEUs coming in and expected. Now, are carriers positioned in those ports? Could that throw a new wrench into where assets are positioned?
Yeah, I think in the future, we look at our IOTI, our inbound container index that Henry Byers created, that it is, here in the next couple of months, there is a lot of potential disruption sitting out there in the water, or actually on, out in China right now.
Yeah.
If you look at it, it's spiking here over the next 7 days, which means we're about a month to a month and a half away from that actually transitioning to any kind of surface transportation. They suspended service on the rails a few weeks ago for UP. It hasn't really translated into higher rejection rates or higher spot market pressure. It's not materializing that way because carriers are in position there. So I think that's really what we're seeing here is the demand may be staying relatively high. It is falling. It is not. It's not as strong as it was right around the end of June. July, of course, is seasonal. A little bit of easing. It's still really, really high. I mean, a 15.3, 15.4K OTVI. I mean, keep in mind, this index started in March 1st of 2018 at 10,000. We're 53%, almost 54% higher at this point. And it's just a matter of time before carriers start to, add some capacity into the market, even though that hasn't happened. If you look at 2018, rejection rates fell dramatically.
And they did.
In August. I don't think that's going to happen here. We still have too much demand. Demand fell off rapidly in 2018 as well. So at this time, so that does not look like the same pattern here, at least for the time being. So let's go ahead and check out the map of the United States weighted rejection index, see where some of this undulation is. And this is the reason why we're not seeing a huge amount of tender rejection fluctuation.
Yeah.
We're not having the demand spikes or any kind of unexpected, activity that we haven't seen over the last several months already. We got Savannah down here starting to ease a little bit. Atlanta is easing. This is, even though demand is relatively high, we're just not seeing a lot of volatility here in terms of overall freight volume. Los Angeles, Ontario, both showing in the red or the light shade of orange there. Both of those markets easing. All these big markets are kind of, they've stabilized a little bit.
I guess so. The orange shows that they're easing at elevated levels, right?
Yes.
In the major freight markets, we have Southern California, we have Dallas, we have Atlanta, and then the ports here, and all of those are easing, and we know that those three markets combined own a pretty sizable share of overall freight volumes.
A lot of freight volume, especially down here in the southeast. Let's go ahead and look at the next map. You can see remember Charlotte there in the dark blue. This is the outbound tender rejection index for the nation. So this is the tightest regions in the United States. We've got, the darker the blue, the higher the rejection rate.
Okay.
Southeast, still the tightest market in the country, but we saw a lot of those reds there, a lot of that orange there. So it may be the absolutely tightest area in the country, but we are seeing things kind of stabilize a little bit in this region. So that's going to bring the overall rejection rate down. carriers have figured out there's a lot of trouble in the Southeast, so they're getting there a little bit more.
Yeah.
And we're talking about a drop from 21.4% yesterday to 21.1% rejection rate yesterday. So it's not like this dramatic, flood of trucks and
yeah, we're
drivers.
not talking 5% rejection
Exactly.
rate. Sorry, we are talking about 20 going from 25 to 21. So it's still very difficult to cover freight coming out of the Southeast.
Exactly. And you look out west out there. This is what I'm talking about. Carriers have figured out that the West Coast has got a lot of action on it.
Yeah.
So it's very, everybody's priced themselves back into it, kind of abandoning the Southeast a little bit, but they're working on it.
Cool.